If you look at the stock market chart right now, the NASDAQ or the S&P 500, and you look at maybe a 60-minute chart, you can see this inverse head and shoulders type pattern forming right now, which has consistently over the last, 5 years, maybe longer, worked out to the upside. We've been in a bull market, and every single time you've seen something like this, we've rallied. And I think that is the reason why this is being watched so heavily right now. I've read a lot about how people are focusing on getting this big bounce into the U.S.-China trade summit, or I think is it the G20? I forget what it is, some kind of an international summit that's coming up at the end of November. But there's a lot of reasons, in my opinion, for asset prices to go lower. I think everyone's catching on to that now with the NVIDIA miss and with the Amazon guide lower and the Apple guide, and all those things. So you're having some earnings that aren't coming in above expectations for the first time in a while. You have Japan, Europe, and the U.S. not printing money at the levels that they were before. You have corporate credit, corporate debt, in a situation that we haven't seen in a while, with GE, IBM, and AT&T having a ton of debt on their balance sheets, and those stocks are all struggling. So people are worried about corporations overly leveraged at this point in the cycle with rates going up. So that's kind of getting baked in, where everyone knows these things are happening. They know we've had a 10-year rally in the market. So things are getting really public in terms of people focusing on the stock market. So what I like to do when this happens is understand that there's way more eyeballs on the pattern than maybe there was 2 years ago or a year ago when the same pattern happened. So I think it's prone to fake outs. So what I'm looking for is either the pattern works out to the upside and then it comes back down through the lows and gets everyone stuck, or it does the opposite, which I like even more, where it breaks down through the bottom. Everyone thinks that here we go, it's going to get a lot weaker, and then it comes all the way back up, squeezes those people out, and then eventually rolls over again and makes bigger lows, which is a pattern that I like as well. So I'm expecting some games around this area because so many people are looking at it. It's unlikely to be clean. And I think this way on various time frames when I think there's a lot of eyeballs looking at it versus when it's quiet. The patterns tend to be a little bit more straightforward and predictable. So that's how I'm taking a look at the situation right now as it becomes more in vogue until people get comfortable again and the volatility slows down. But I think it's a good opportunity for all of us who are watching markets to have tons of opportunity and things to do. And I don't see that changing for a handful of years here with all the events we have going on. So it should be good stuff for us.